So Satvik is in the 6th grade and in 11 plus year old. And in this time he has already scored two important certifications from London School of Music. So he is going to present you the Vande Mataram, a very small patriotic song of India, and post that I will take over. So over to Satvik.
Good evening, everyone. As you know, I'm going to be presenting you Vande Mataram on keyboard. And as you know, my name is Satvik. My dad introduced all of my details, and hopefully you enjoy, and hopefully you like my dad's presentation and the webinar. So I will start right now. Thank you all for listening the song which I played.
7 best innovation of smart finance from the year 2005 to till date. All these mathematical concepts what we have innovated from the year 2005 to till date, there are many innovations are there. Out of that I am just going to list 6 to 7 concepts. Beyond that, we have done number of innovations in the WD Gann study. We have done number of innovations in the intraday trend forecast. We have done number of innovations in the options. We have also innovated how you can put the binomial pricing model into action. We have also changed the calculation procedure of. We have also changed the calculation procedure of IV rank and IV percentile. So all these things we have done from the year 2005 to till date. So I am going to present a part of that to all of you, and I have also shared the document in the group. This is the Gann Trader India group, so all of you will be there. So all this concept what we have developed so far, it is in the public domain, and millions of traders are accessing every day our web portal to know about this. Before I should start this session, why these mathematical models are more trustworthy, or why these mathematical models you should trust as compared to other models. So we have technical studies, we have chart studies, we have graph studies, we have pattern studies, we have candlestick studies, and on it goes endless. However, all these studies, whatever we are doing, it is all these studies, forget about our innovations. Before smart finance innovations, all the studies and most of the studies considers the stock market is a discrete data. Discrete data. So those who are the student of mathematics, they will be knowing what is discrete data. A data which moves between a rhythm 0 to 10. So one rhythm or one particular cycle, it is known as discrete data. However, over a period of time, once the electronic trading systems are being introduced, once the computer come into our life, once exchange floor trades ended and we enter to a level wherein electronically we are doing the trade without going to the exchange floor. So this data has been changed to discrete random data. Earlier to computer it was discrete data, now it is discrete random data. So data itself has changed. Once the data is changed, random data is the current data, and once this discrete random data slowly changing to discrete random high frequency data. So it is a high frequency data now. The frequency of data is very sharp and rapid. It is coming very quickly to you. So for that reason only, mathematical models are the only choice for you. There is no other choice. All those 1970s innovations of indicators and oscillators, mostly they are outdated. So those are the things I am going to present you. And from the 2005 onwards, we have innovated many things. Pair trade using the beta decoupling method. This was innovated in the year of 2006-7. This innovation of daily volatility, this has come in the year of 2015, and this also 2015. In between, lot of things has come, and this natural constant method which has come in the 2020. So these are the 2020 method. Z-score method also 2020, and corona period, and this also 2020 we have innovated this monthly top and bottom using the VIX. Zero loss option price model also it has come in the 2021 period. So these are the innovations happened in different period of time. And once we innovate certain things, we present to the public, and it is not a hidden things. And many of those, what we feel it is a proprietary, we used to keep it with us. So in this 3 days event, I am going to present you one by one. So today I will be starting with the intraday trend using or intraday trade using the daily volatility. So in this process, we will be calculating the volatility, we will be projecting the price range, trend will identify, we will enter the entry and profit booking procedure we will learn. And we will experience what happened in the past 2 days. And this will work for commodity, currencies, any instrument of your choice. Suppose if you are not trading in Indian market, you are trading in some other market, you can also use this method. If you are using the crypto, you can also utilize this particular method. So this method you can utilize based on your need, based on your market. So after all, this method understands only the numbers. So here how it will go on. volatility we have to calculate from the past 10 days data. Why it is 10 days data? Because most of the process we are finding out 10 days moving average, 10 period moving average, all these things are universally accepted concepts. So there is no 11 days average, there is no 12 days average, 10 days moving average, 10 period moving average. So 10 is a standard, so we are not changing the standard. Say I have taken the past 10 days data of Nifty future expiry of August. I have calculated its, I am going to calculate its volatility. How I will calculate? I will be taking the ln value and ln square value and post that the average of both and then variance, then it goes to daily volatility. So don't worry about these calculations. We have ready-made tools available in our website wherein just by punching these values you can able to get those volatility picture in your hand. Also, if you are a member of that group, you will be getting this particular Excel sheet wherein you can just feed the data, you can get the volatility. If you do not know, you can just go to our website smartfinancing.com. This particular page, you will be getting volatility calculator for intraday trader. If you just click here and feed all this data, so it can give you the volatility estimate also. So here, so volatility estimate also you can get it. So these are the free tools and it is Android tools also available. So you can utilize all these 14 concepts based on our own innovations. Just it requires some simple input of data. Whatever the data, if you require data, if you input, that is also not a too long data, not 30 days, 50 days data, recent data, couple of values it requires. If you give it, it will project for you. So this is what calculation happened, and for the 18th of August we have projected these are the levels should be the buying entries and selling entries. 19,402 above it should be a buy entry, 19,365 below is a downtrend. So on 18th it has opened up at 19,330, made a high of 380. So it has no chance, it has never gone to 19,402, so there is no buy trade has it triggered. It has opened at 329, so in this place, and post that it has moved to 390, 380 level. So you can say you could have got a chance to sell. And more precisely, which is important here, the low of the day, the low of the day was 19,275, closing of the day 19,331. So this is what happened, 275 and 331. So you can say how closely approximate this thing, 19,331, 19,000, 19,275, 19,275, 275. So these are the values. Day's low happened, this is the closing happened. So day end it has closed here. In fact, it has opened at 19,329. So the close approximately of the calculated values and the values what happened in the market. So that also you have got it here. So this is proves that how this particular 10 days volatility estimate is valid for your trend forecast. So now it is for 17th and 18th we have done. Now for example, if you want to do for 19th, so 18th we have, then Saturday, Sunday, 21st today is the data. So can you see today's data? So I'll just shift the date here. So I require the 18th day, 18th here date. So my old data will go, my new data will come here. So old data has to go, new data will come here. Which values should come here? 19,331, 331.5. So this has given, and these calculations what I am doing, it is valid for 21st August, 21st August, 21st August today. So what calculation it has thrown to us? It has given 19347 above, it is a uptrend. 19315 below, there is a downtrend. If downtrend happens, it can find out a support here, 19290 to 278. Uptrend has the potentiality to 372 to 384. What happened during the day, you can see here, open 325, so much above this thing it has opened, and in fact 310 it has gone to the low. So here downtrend given just for a couple of minutes. Those who have done the trade today, they will be knowing very first 15 minutes that all actions has over, and it has gone up, closed at 19399. 432 was high. So you can say the close proximity today 19432, 432, hardly 7 to 8 point it missed from the last target, and in fact it has ended at 19399, 399. So this is the price we are getting. Adjustment price will be 91, 92 something it will come. So this is what happened for today. So if you want that, yes, these are the 2 past days are over. So what is going to happen tomorrow? So what is going to happen tomorrow? So if you want to do that, so how you should do? Just switch this particular data points. So I will be just selecting this, copying it and pasting here. So now in this place, I will be feeding 21st August data, and this data should be 19399. So this is the Nifty future August expiry. You can check the data here. If any changes in paisa, it will be there. So we can also adjust that. So we are going to calculate for tomorrow. Tomorrow at what price we should buy Nifty future, and what will be. So here index future I am going for. So 399, 19399, you can see here the last traded price 19399. So 19399 I have used. Take a photograph of this one. If you have mobile, you can take a photograph so that tomorrow you can able to validate it. So tomorrow if Nifty future goes above 19413.75, means round it to 414, then we'll be in uptrend. Uptrend will have a hurdles here 19437 to 448. If it crosses, we can very well touch 19500. So same process, if it fall below 19384, it will set for the downtrend, and if it is, it will find out a support here 19360 to 3450, and if that is broken, the last terminal target will be 19298. Again I repeat, this is Nifty future price value. So here the key points are, what we are doing here, we are taking the volatility from the past 10 days data. We are calculating the daily price range, how much price point of oscillation can happen based on the volatility. So it is telling us 62 point. We are using the Fibonacci ratios along with the 62 points, getting various Fibonacci ranges, adding to the closing price of 21st August, the last price of 21st August. Various targets are surfacing here, and we will be taking the Fibonacci based on Fibonacci principle 19413 above or 414 above uptrend, 19384 below downtrend, and these are the target. It is a innovation happened very, you can say 2015, and many traders have tested it and many are using it successfully. Based on that, we have developed a number of softwares, all are working successfully. People are extremely happy with this method. So this is only 10 days data point. So in fact in software we are using the real-time data points and the real-time volatility through graphs method. The underlying concept is same. So Fibonacci is your trend guiding. We are using the Fibonacci ratio. We are using volatility for the price estimation, how much price oscillation it can happen. So all these things also figured in all my books, whatever the books I have written. So I have written 6 books on the capital market, and all these books, all my books are conceptually standing on Fibonacci method. So all these books, whatever you are seeing in our website, these books are written by me. So this is, all these concepts are well explained there, how volatility estimate is being utilized on different concepts. So fine. So this is our intraday innovation which has made a great impact for the traders. Now coming to Gann angle and volatility. So what is Gann angle? WD Gann angle. If you are using any charting and graphing software, you will be knowing that there are 11 trend lines. So you are having a tool which is having 11 trend lines like this. You are taking and placing the tool somewhere, and it is drawing specific lines. Third trend line above you are buying, and inverted trend line also you are making it. So all this process. So why Gann angle is very important? WD Gann has told there are 12 months in a year. If I want to split the entire calculations to 12 segment, I require 12 trend lines, and every trend line will make specific degree. So the smallest degree in this is 3.75 degrees. With if you take it is x and y axis, so this is 3.75 degree. Why such a funny number 3.75 degree? So why not 5 degree, 6 degree, 7 degree? Because WD Gann's concept totally stands on the degrees, arithmetics of degrees, all those things, how you can calculate the supports, resistances and all. So what is the beauty of WD Gann's method? WD Gann method is the only method so far available which can do a timing forecast. When the trend is going to change, that time you can do a calculations using this WD Gann method. WD Gann method is the only method which has told price and time are having one relationship. We can say if there is a 18 and 36, that numbers are related with each other at 180-degree relationship. So numbers, every number in this universe are related to each other through some degree relationship. So why this 3.75 degree it has come? So 1 degree, all of you will be knowing 1 degree equal to 4 minutes. In timing terms, 1 degree equal to 4 minutes. So 3.75 into 4, it comes to 15 minutes. So 15 minute is this, 15 minute is considered as the smallest cycle. Smallest cycle, so smallest time cycle. For that reason only WD Gann study starts with the smallest degree is 3.75 degrees, then it goes to the higher and higher. So it goes to 7.5 degrees, then goes to 15 degrees, like this way. So this particular WD Gann study, you can say in different ways you can utilize it. So any low you can take, so you can calculate different targets and supports using the Gann's degree factor. So in Gann's square of 9 principle, 180 degree equal to consider as factor 1. So all the resistance will be calculated from the low, added all low or any price added with the respective degree factor. So degree factor means 180 degree equal to 1. If you want 3.75 degree, so it should be 3.75 divided by 180. This is degree factor, and the entire thing will be taken double multiple or square. So this is how resistance will be calculated in Gann's method. How the support will be calculated? So high minus high, high or any price of your choice minus degree factor. So degree factor is nothing but any degree divided. So 180 degree equal to 1. So this entire result you have to take a double multiple or square. So this will give you the supports. So 11 supports and 11 resistance you will be finding out. So the third resistance or support line will be your entry point. So all will not be having that tool or graph. They can drag it, put it there and finding out. And moreover, once you go for those graphing tools of this mathematical tool, it is, you can say it is an uncompatible combination. So here what WD Gann or Gann angle principle is saying you are not using it in its full efficiency. You are just using it for some reference point. But mathematically, if you that time you use it into the full in its full capacity or in its complete efficiency of that particular method you can get. So this is what Gann angle principle is. As I said to you, 11 trend line. Third trend line crossover sets the uptrend. Third trend line crossover again sets the downtrend. So now price, from where you should draw the uptrend and where you should draw the downtrend, that is your domain. So we did here, I have added the volatility factor into it. How I have added? I have taken the reference price. It may be your open price, it may be your previous day's closing price, or it may be your current price, and price range we have to derive from the volatility. Say for tomorrow you want to do a calculation. Say for Nifty future, we are going to do a forecast, or we are going to do a calculation for tomorrow, that is for 22nd August. How I should proceed? What are the data I required? I required a price range as per the volatility. So as per the volatility, just few seconds before I have calculated here, for tomorrow I am expecting 62.45 price point oscillation. So I'll be using 62.45 oscillation here, and today it has closed at 19,399. Once I give this data, and here to also 62.45 if I make it, so you can say once I give this data, all my calculations are done, and it is telling me tomorrow. Today it has closed at 19,399. Tomorrow, if it is giving me 19,404 above, I am in uptrend, it can take me to 19,433, and 19,335 below, it can take me to 19,328. So this is what it is telling. It is very small figure now, but next what we have to do? Next cycle, we have to go with the 2 to 3 cycle. So this Excel, it is just a raw method, how it is calculation is happening. You can learn from that. But if you want to really test this method, what you have to do? You just go to our website, and we have completely programmed these particular things into our calculator. So you can see here, lot of things is surfacing here. Gann angle calculator for intraday trade. Again, dynamic intraday Gann angle calculator. Any two things out of these two things, any one you can calculate. So here, if you just click here, it is asking the high, low, and last traded price. So this is one way. Again, we are going for dynamic intraday Gann angle calculator, where the volatility takes place here. So what I am doing to do here? So here, today, whatever the high and low and closing happened, that I am going to put it, or tomorrow also if it happens I can put it. So here also we have given, if you do not know the daily volatility, please click here to calculate. So how to use this tool, we have given a small video also. So all these things we have given, informations I have given, but I will give you a very small analytics how we should use it. So here the data, it is asking for high, low, and current price. So what is the high happened? So high 19,432, low 19,310. 19,432, 19,432, and low 19,310, and current market price 19,399, and daily volatility. Just we have calculated this daily volatility. So using our Excel here. So if you are using this daily volatility, so this is yearly, this is the daily volatility. So it is not in percentage terms. If you want in percentage terms, into 100. So daily volatility, if you are getting 10 days data, from there you are calculating, you need to calculate it manually by yourself. However, if you are not having this data on ready-made fix you want, then you have to get it from the NSE site, which is completely wrong, because they have taken past 365 days data. 321940. So I will be putting 0.324930. So just you have to go for a calculate button, you have to hit, and it will give you the same process where we should buy, what will be your sell price, what will be your targets, all things you have got. So this is the end of the day data. If you change it tomorrow morning, once market opens, after 5 minutes, what is the high value, low value, and this thing, daily volatility, if you give, you can get. So suppose if you do not have the daily volatility in your hand, and if you do not have the facility to calculate this daily volatility, you are in a hurry, what to do? So NSE also gives one daily volatility. Go to the NSE, you hit on any future stocks, so you will be getting a daily volatility here. You can get the daily volatility here, 0.83. However, this is based on past 365 days data. It is not based on past 10 days data. However, it is approximately correct, because based on this daily volatility, if you calculate, you will get 2 to 3 targets. You may not get the full target. You may not get the matching of the targets, means the day end, the high and low may not match with this. So 0.83 you can utilize here. So every tomorrow, once the market opens, if you have no choice, then you can take this value and feed into this system and get these things. And these are the free tools you can utilize just by clicking in your mobile. If you just save our smartfinancing.com site, so from there we have a Gann angle calculator. So here you can able to make this thing, or you can use for our Gann angle intraday trade calculator. This also you can do. Here two editions we have given. So as I said to you, Gann angle can be utilized in versatile way, in many different ways. So this also was our 2015 innovation, and this has made a great impact. It has made a great impact for the traders. And the same process is being programmed and presented in different softwares. So we want that you should understand the concept, you should understand how this particular systems are developed. Also, then you can utilize the different software tools, or you can work out in your Excel. So based on your convenience you can do it. So this is, and this is what how our softwares look like, and here you can say everything. So the third innovations what we have done, natural constant. So here WD Gann has spoken about certain things. He has innovated many things. He has innovated square of 9, then it has gone to multiple square of 9s, then hexagon, then tetrahedrons. Many things he has innovated. But one part he has told, natural constants also we can utilize in our trend forecast. What are the natural constant? Pi, square root of 2, square root of 10, golden mean pi 1.618. All these things also you can utilize in your trend forecast. So this was a great finding of Smart Finance. So what we did here, we have utilized this particular concepts. So E, pi, square root of 10, square root of 2, pi. So these are the mathematical constant. So you'll be knowing that whenever you are going for the square of, you can say one circle's area, one particular geometrical object's area. So you'll be using this particular constants. So how, what we did here, there was a formula presented to us, the exponential formula. The price, stock price is the multiple of exponential to the power of rate of interest into time. So what we did, this rate of interest we have changed with the volatility we have changed it. Time we kept it time in a year. So for intraday it will be 1 day in a year. For 10 days it will be 10 days in a year. Time we have not picked. Only the rate of interest we have changed with the volatility. With rate of interest, when you talk, you are talking about a financial instrument which has zero fluctuations, or it is, you can say its fluctuations or interest cost is periodically it should increase in that. But stock market, it is not like that. If you are buying any stock, say Reliance share, you are saying that I am spending 1,000 rupees for this particular share, so every year 50 rupees it should gain because my interest is 50 rupees. That should be the max minimum gain. So stock will not obey that. So for that reason only, this particular formula was a discarded formula, and many people have discarded it. So what we did here, this R rate of interest, we have changed to volatility. Once we changed it to volatility, not only we changed it to volatility, we have also multiplied the constant, natural constant in it, natural constant into this factor. So we got the amazing result. Amazing result we got. So you can see that things also, you can experience that things also. So here I have given you presentation in your free time. If you are interested to learn the calculations, you can learn. However, I'm just going to show you how these methods are working. So here we have a web calculator. Just go to there. Today what price it has opened. Very carefully listen to this. Three inputs only you require. Today what price Nifty has opened, what price Bank Nifty has opened, what price any ABC stock has opened. So any price it has opened. So we'll be taking the value of this NSE from Nifty future. Nifty future 19325 today opened. So I'll be giving 19325 my intraday. So it is day is 1. Annual volatility of Nifty future. Annual volatility of Nifty future I required. I can take both the ways. I can take from NSE, but it is a, as I said to you, it is not from the concurrent data. It is from a past 365 data, or I can take it from my recent data. So recent data, if I take it, then this was a 7.6 something was there. Suppose if you do not want to take that, simply if you are going for NSE site and taking it 15.93. So make it as 15.93. Whatever data is available in our hand, if we put that 15.93 and calculate it, so we'll get what kind of calculations we are getting. So this is what the calculation happened. Open price, as soon as the market open, you will get the open price. 9:15 market open, exactly 9:15 you will get the open price. Intraday, day 1. If you want to hold it for 3 days, you make it 3 days. Annual volatility readily available here, 15.93. I have utilized. This is the calculation it has come. So what was the high and low compare? So what is the high today? 19,432, low 19,310. And what is my calculation has come here? As this volatility is little overestimated, so for that only till second cycle 19,432 high. So till what point it has come? 19,431. 19,399. So here it has closed. You can say very close to this. So you can say very close to here it has closed. 310 was the 310 was the day's low, golden bottom. So here. So you must ask me how to trade based on this particular readings. So any moment the stock price crosses this golden mean top, it should be bought here. Golden mean top should be the buying price, and this will be your stop loss. Stop loss. Once you go to the second cycle, so this golden mean will be your crossover you will be buying, and this will be your stop loss. Second cycle. If you go to the third cycle, then third cycle golden mean crossover will be your entry, and here this golden mean crossover will be your stop loss, and your hyper cycle will be your final target. So this has happened for Nifty. Can you check the Bank Nifty? This is a very handy tool, and natural constant is a wonderful tool for the algo traders. So those have accepted this method from the 2020 in their algo tradings, they are extremely happy with the performance of this. So 20.62 is the annual, and today it has opened at 43,900. So calculations you can learn afterwards. So 43,900 it has opened up, and its annual volatility is 20.62, 20.62 as per the NSE data, and calculate. It is yearly data. Still this annual volatility is not optimized. So this is what the calculations came. Cycle 1, cycle 2, cycle 3. What is the high it has made and what is the low it has made? Just have a look here. So what is the high it has made? It has made a high of 44,215, 44,116 it has closed. 44,215, 44,215 it has made a high. 44,205, 215, 15, this is the high it has made. In fact, again and again I am repeating, this is not the optimized volatility. This volatility is being taken from the past 365 days data. If you change that volatility from the 10 days data, if you derive, you will get more accuracy. But still, having so much of this, that overestimation in volatility, see the high days high what it made, what was the hypercycle targets, and 44,116 it has closed, and 116 it has closed very close near to this. So these, see how the market respects this dynamic calculations, and calculation process also I have given you in your presentations, how the calculations are being made. That also I have explained in this, how the first target, next top, high top, minor, hypercycle, all this calculated. These two also I have given you. So this was our 2020 innovations, and it was a, as I said to you, if you are a algo trader, if you are using the algo trading for your day trading decisions, then this method will not disappoint you. You will get enormous success in this method. And our softwares also empowered with this particular method. So you can see all our softwares, natural constant software, those who are utilizing it, you can say that tremendous success they are getting this. Any stock you can analyze. And we have also enabled now crypto. So if you are a crypto trader also, you can utilize this natural constant method. We have already finished our crypto products, and it is going to be launched within few days. So if you are a crypto trader, you can take full benefit of our products. The same thing you can see here, natural constant. Real time basis, it will be getting updated, and you can get fantastic success out of this. The moment, only thing you have to remember, golden mean crossover, you have to buy. This will be a target. You may ask me why for this first top and second top. These are only confirmations to tell you whether the trend is going to continue or not. These are only stopover points. These are the points which are going to validate your studies. So this is a great tool for your intraday. So I have introduced three things here. You can utilize our web tool, which is free of cost. Nothing you have to pay, only you have to fill all that data and get it. And if you can say that all these things should be automatically handled, then you need to go with a proper tool. So same process, the Gann angle tool, what I have told to you, the Gann angle tool also we have here, midpoint tool also we are having here. With the Gann timing analysis tool also we are having here. So all these tools, whatever Smart Finance developed, it is not that costly as compared to all your chatting tools. Your chatting tools required monthly some 5 to 6,000 rupees of commitment. Again, it is a outdated study, and again you need to hunt what to do. So here you need to hunt what to do, because it will just plot the graphs and give you. You need to pull a particular indicator, put it there. You need to calculate or understand the internal of that indicators and use. And after doing all this hard works, what is the result? Not even 50% success. After this, all these hard works in the chart and graph, what is your success? Not even 50%. Why? The data what you are using is no more a discrete data. It is a discrete random data. and now it is migrating to the discrete high frequency data. So data which is high frequency in nature, discrete random in nature, that will not obey a static calculation. It requires some dynamics. So what is that dynamics? Volatility is that dynamics. So volatility is the dynamics which is being added to that, so that whenever you are taking the volatility into account, that time the data becomes dynamic. Data becomes discrete random data. So projections come true. So that is why this mathematical models works well. I have shown you this proof, natural constant. This is the calculation. Definitely once the market has opened, the high has not occurred at that particular time. High has occurred after that. So this is the cycle to high happened, 44,215 happened. The moment open is happening, the volatility also is in your hand, open price is in your hand, just you have to put it and punch it and have a click here, you will get that things. So this, have a look here how dynamically it happens. It is not for today. You can day by day for 100 days you can test, and 100 days you can take a estimate. Morning you have, as soon as market opens, you have put it 100 days, 1000 days, how many days you want to test, you test it. So you can just calculate it, days high what happened, days low what happened, days closing what happened. That is the critical data points. So high what happened, low what happened, close what happened. Keep recording it for 1000 days or the days, number of days you want, and you will definitely get this particular system will give you more than 70 to 80% of accuracy in its calculations. There is, this is confidently I am telling, this can give. So if it is giving that, so when it is doing for the real time estimations, so you just imagine how the benefits it will be giving to the traders, those who are utilizing this system in their trend forecast, in their decision process. And these tools, I was telling you, our tools are not pricier tools. It is available at a very affordable cost, very affordable cost. We have kept, and you can learn this concept. It is not hidden to also to you. So this tool what I have shown you, it is just coming at a 4,000-5,000 rupees cost. You get all things for one entire year. So you spend only 500 rupees per month, not even that, not lesser than that. So you get a tool which can guide you. As soon as market opens, you know what is the trend is going to be, what it is going to give you. We have also given intraday top and bottom here. Many other things we have given. So I am not talking about all those features. This natural constant, what you have experienced now in the manual addition calculator, same natural constant I am showing you in the paid tool. In just a click of mouse, you will be getting the result, which will be enough for you to take a trade. So this is for your natural constant. So these three I have scheduled for the day, and one more thing also I have scheduled for the day today, that is called your how we can calculate a VIX type of value for Bank Nifty. As I told to you, Nifty is having a VIX, volatility index. However, Bank Nifty doesn't have a VIX. Why? VIX requires near month options, far month options, and current month options, 3 months options, in the money options, their IVs and some interpolation method, and that some amount of weightage has to be given, so VIX should be calculated. But Bank Nifty having illiquidity in this. So Bank Nifty is having illiquidity in all three these options, for all three series options. So for that purpose, we cannot able to introduce a VIX for the Bank Nifty. What is the next take for us? We need such kind of value. So we have a reciprocal algorithmic method where we can calculate a near similar VIX, not the VIX, near similar VIX. So here I'm taking the call options and put options in the money options the with respect to the spot price. So simply you have to just, it doesn't require a great time to calculate also. If you just open up the bank nifty, and here call side you required 4 strikes. Why more than, not for than, more than 4? So here you, once you go deep in the money, sometimes the IV calculation also may not be feasible. So here I'm taking the 4 call options into account, 1 2 3 4 here, and I am also taking 5 put options into account. These are the weekly options, I suppose. So I will go to the monthly options, it will be more clear. So I will not be using the weekly options, only the monthly options I will be taking. So I will be taking 4 in the money call options, which is already showing up here, and here too also 4 in the money put options. So this is the 1 2 3 4. So you can see here I got 4 in the money call options and 4 in the money put options. So after this I have to take the average of this in the money call options divided by 4, and these two also divided 4 independently. So I've already posted how you can use the natural constant method in real market. So that all of you have understood what are the data required for natural constant, how, when you should calculate. So here you have to, I'm telling about the VIX like value for bank nifty. How bank nifty VIX like value, you will find it out. First, what you have to take, 4 call option. Why not 5 call option? Why not high put option? Why I reduced one number here? Because in the reciprocal algorithm, if the data sets, 2 data sets are having the similar number, then it says that the reciprocation of the data can convert to a error, or we have to calculate a error factor for that. Because here I am using, in your free time you can search for reciprocal algorithm. It is a very small mathematical algorithm. If you take 2 data sets of the similar size or same size, then you have to calculate the error factor, so it will become more complex. So what I am doing here, by just reducing 1 data points, that error calculation also can be avoided. So separate call options, separate put options, 4 call options and 5 put options. So this has to be taken. So here 5 put options need to be taken, all ITM in the money, no out of money option should be there. Here 4 put option, call option should be taken. So you can take eitherwise also, you can take 4 put and 5 call also, that is nothing wrong in that. One data should be less. Then independently you take the average. So average of calls and average of puts you can take. If you find out that average of call and average of put having close similar value and they are not having a huge difference, then simply you can take the call average, put average divided by 2, that is your fix. But if there is a huge difference, here in this case everything look like 11 point something, here too also 11 point something, so there won't be a great difference. So this average whatever you are getting, this average what you are getting in put side average, call side average, that you can just add that two average, average call, AVG call and AVG put, divide by 2. So that will be your fix. However, if anyone is 40% extra, this average is 40% more than the call average, or call average is 40% more than the put average, then the problem comes here. So what we have to take, whichever is having excess, anything is bigger than 40%. If call average is 40% higher than the put average, then only 80% of call average we should take. 80% of C average we have to consider, and 100% of P average we have to consider, and take the divide by 2. So by this process we can get the value. So this is only very rarest case it will come. However, this is called your reciprocal algorithm, but Do remember, this is not VIX. This is a generic version of VIX or a very close similar value of the VIX. It is not the VIX at all. It is not the way VIX is being calculated. VIX is being calculated in a very complex way, since here illiquidity is there and we do not have the options, liquid options, which is having more than 57,000 minutes of expiry. So VIX cannot be calculated there. So we are helpless. We have to use this generic VIX method. So these are the methods I have explained today. Tomorrow I am going to take all your how you can do the pair trades in the beta decoupling and Z score method. So that is for tomorrow's session. So if so here in this particular tool itself, we have given the annual volatility link here. If you want the exact annual volatility based on the past 10 days data difference, you can click in this link, give this data, calculate the annual volatility and feed that annual volatility to your system here, so you can able to project that thing. So this is natural constant method. Again, I have told you there are other two methods also we have that. So here also you can say dynamic intraday Gann angle calculator, volatility based calculator. So all these things, intraday 1 hour trend finding software. So all these things, the same concept we have developed into different small calculator type of things, wherein you can just give little inputs and get that thing. Same thing also available in the Android edition, that also you can get. So these are the particulars of, so these are the ways you can utilize this particular tool. And we are going to conduct in the month of September advance webinar on Gann subject, wherein Gann's hexagon and you can say tetrahedron, Gann vibration number, square of 144, universal, this is new universal formula for converting number to degrees, advanced concepts, very advanced concepts of the WD Gann. Concepts is going to be converted or going to be conducted from 16th September to 24th September. Already 65 people have registered in this event. So if you are interested, you can register in this event and take the benefit of that. So if you want the real-time tool to do a calculation for you, you can make the use of our software products. However, if you have any query, you can, by looking at a budget next day, it will increase in a steady way. So when Surajji is asking a question, if there is a event like budget, election, RBI review, certain times the volatility will go up, but that growth of volatility will not happen immediately on that day. With a sequential, it will go 15 days before, 10 days before, slowly it will go up. However, these methods will adjust themselves. If you are using the volatility based intraday system, price range will be different that time. 0.236 price range also will be different. So your entries will be different. So in this case, automatically they will adjust, because these systems are developed on the concept of dynamic random data or discrete random data. So volatility will give that randomness to it. So same process, natural constant method, volatility if you take, so automatically it will adjust to it. In case there is a gap up or gap down happens, no problem, you can change the data point to the opening price and you can get it. So here it is not essential that you should take every day's closing price. If there is a gap up happen tomorrow, you have to take the opening price and readjust it. So this is what you have to do. And if you are using the web tool, you are not using previous day's close. So here Surajanji, you can see here open price, it is telling open price. What is this? If there is a gap up or gap down happens, that is already impacted on the open price. So you need not have to worry about that. So volatility, whatever comes here, you can, that also will self-adjust. NSE site data you can take, or you can take from here. So it will self-adjust itself. So you need not have to worry for that. It is a dynamic method, so it will adjust of its own. Second question comes from Ramkumar ji. In a low volatility like 11 to 12% VIX condition, the targets are slow to achieve. Yes, definitely. When there is a low volatility, the gravity will be less, the uptrend sequence will be less. So you will definitely, you may not get all the targets, you will get little lesser targets. It will take time to achieve that target. So so Gann advanced program, you are Subramanyam ji, you are talking about Gann advanced program is for, so Gann advanced program is entirely different. If you have earlier attended the program, each time our program subjects used to be different. So we do not repeat the same things again and again. So if you have attended earlier program, you will be knowing. Those who are attending Smart Finance program from past many years, they knew that every time we come with the new topics. Gann universal formula for converting number to degree. So like you have a formula in square of 9 principle to convert a number to degree. Number to degree in square of 9 principle. You take a square root of number, then multiply it with 180, then subtract from 225, then there is a mod function. So MOD mod function you convert. Hexagon has a different formula for converting a number to degree, but there is a formula which is universal. So for it can convert any number to a degree, but it is not based on the Gann square of 9, not based on the hexagon. It is universal. It is not depend on any geometrical figure. So that, as I said to you earlier also, I used to say, it may takes many years or throughout my life times to all decode all Gann's concept. It may take entire part of my life to decode the entire Gann's concept. So many concepts, whenever I come across, I decode, I understand, I try to utilize that things for the trend forecast. That time I bring it to the public. You must know, or you must ask me why I bring it to the public. Why not? I should kept it within me. That is a very selfish question many people used to ask. They used to say that if you are capable of making money, then why you are teaching? So if the same process happens, if farmer says that I am growing the grain, so why should I sell to you? You grow your paddy and eat. Why should I tell to you? If one if a mechanic says that I know how to repair the vehicle, I will not help you, and I know how to repair the vehicle, I will drive. If you want, you can only sit in front of me or you watch how I am driving. So there that logic doesn't go. So here it is not that by sharing a specific part of knowledge you are losing anything, you are gaining specific things. So here you can say Gann advanced course. Gann advanced course, we are going to take many advanced concepts, and those advanced concepts will be covered in the upcoming program. So no problem in that, but what is the use of doing a spot price of Nifty? If you analyze, it is good for watching, but you cannot able to trade there. Spot price never trades. Yes, equity, if you can do that, you can trade. So whenever you do some calculation, it should have an objective. I am doing this calculation for trading. If you spot price, if you take, definitely the ratings will work out. There is no doubt about that. But spot Nifty you cannot trade, spot bank Nifty you cannot trade. So simply if you calculate that, you can watch watch the figures it is happening. Otherwise it is monetary terms, it won't give you any help. Monetary terms, it doesn't give you any help. Future price should be referred for the options Hanumanji month. You can use 19,399 number of days, you can make it 30. Here annual volatility 15.06 and calculate, so 1 month also. So he can utilize, but here this tool I think we have given only for 7 days period, but you can use the natural constant for 30 days period also. So you can, it is given in your training group. So here, not training group, it is given in the group from where you have joined. You can see here WDSF Gann Trader India. So if you have joined through that, then you would have got that group. So if you have taken Husenji our products, you can privately contact me. I can, if you have any uh, issues, I can attend to it. These programs